You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Well, good afternoon. Welcome back. Today is Thursday, 27th day of July, 2017. All right. Happy Thursday. We're over the hump day. We're on the downward slide into the weekend. Tomorrow is Friday, and everybody's working for the weekend. So here we go. Sort of a sleepy day on Wall Street, but well, I'll just show you. In fact, if you can't see my screen, go to the home page of CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions, watch live now, bang. 30 seconds later, you'll see this chart and all its excitement, and you'll have access to the chat box, which gives you access to a worldwide audience. If you've ever had something you wanted to say, get off your chest, share with the world, you got a great idea, plan to save humanity, colonize Mars, doesn't matter. Type it in the chat box. We'll share it with the world. Fair enough? There's another approach. youtube.com/CFRN. In fact, let me go there right now. My very own self. That I might say hello to those who have joined us over there. Over there. Over there. Yep. Chat box, the whole deal. It's all there. All there. Ready for you. Except some days I have a small issue. Why do I have a small issue? I don't know. But stand by, I'm going to fix it. By golly. Oh, I know. I need to go back to the home page, and then I need to go to my page, my channel. And then I need to click live. It used to seem like such a simple process. I think I get ahead of myself. No surprise there. Yep. 932 subscribers. Hey, why don't you push us over 1,000 today? Huh? You want to do that? It says 932. You could be a subscriber. Just go to youtube.com/CFRN. Subscribe. And if you're the one who puts us over 1,000, we'll do something crazy. Something just totally off the shelf. Like, I don't know, get you a t-shirt or something. What do you think? All right. So now that everybody can see this chart that I've bragged about, beginning of the week, we're like, hey, look at that. Caught a rally overnight, pushed us up to last week's trading zone at 75.76. This could be it. Alice, we could be going to the moon. And then, as we slide across the rest of the week, not so much. Now, for those of you that are new to trading, you're probably like, well, what's the guy making such a big deal of? It's a chart. Well, for those of you that have been around a while, you know that that's not what we would call a chart back in the day. That's what we would call a holiday back in the day. And we just had the Fed announcement yesterday. We got no rate increase. During the half hour following the Fed announcement, we had about a 4-point range in that 30-minute candle, I believe it was. What's up, Doc? I mean, this is far from normal. I just gotta say. Now, let's make that 24.77. This is how little things have changed from week to week because of the somewhat slow nature of the market. 24.76.77. This week's weekly trading zone. And normally they gap about 10 points apart. Yeah, not this week. Okay. And then below that, 69.70 on Thursday. For those of you that are new, by the way, for those who are returning, welcome back. If you're here for the first time, a special welcome to you. If you have a question about anything, just type it in the chat box. You're the only one who can see what you type, except for Michael and I. And the only reason that we can see it is so that we can answer the question. Be kind of pointless if we couldn't see it, right? So, 69.70. We spent, basically, here's the Sunday night Globex open. I guess the next zone below that would be 61.62, which I can probably grab down here and pull up. So those of us who are partners, those of you who are partners, knew coming into the week it was going to be some pretty tight going. Not that that's good news. However, you knew what it was because you had the benefit of the weekly trading zones. And the weekly trading zones do go out to the partners every Monday morning at 6:15 a.m. Eastern. And on weeks where we have nice 10-point ranges, 15, sometimes 20-point ranges between the zones, that can be quite meaningful. Okay, so from 61.62 to 69.70 up to 76.77. All right, Sunday night Globex open. We attempted to run down to the zone at 61.62, couldn't quite pull it. Got back above 67, made another run. Finally got back up to the zone overhead. This week's zone, 69.70. Made another run, couldn't pull it off. Got back up to the zone. See how we keep going back to the zone, back to the zone, back to the zone. And because we're up at these all-time highs, buyers are afraid to buy, the sellers are afraid to sell. Then we get a breakthrough and we're like, woohoo, yeah, that's what I'm talking about. And then the slumber returns. Oh yeah. Now overhead, should we get wild and crazy, two wild and crazy guys, who doesn't remember that? 92.93. That's what you're looking at. If the market can find some reason to get up and rally, that's where we're headed. That's where we'll go. That's where we'll find rest. Not saying we're going to go there. Just saying, if something happens, be it a man-made disaster, a natural disaster, a Trump disaster, that's what we're looking at. All right, let's have a look at numbers around the world. Maybe there's something happening somewhere else. We'll look at the cash markets. We will start here in the U.S., where, believe it or not, everything's actually green. The Dow is up 64 points. NASDAQ is up 30. S&P 500 is up 5. And the Russell 2000 is up almost 4. Almost seems like a trick, doesn't it? But those are the numbers. In the commodity basket, crude oil is up 24 cents, trading $48.99 last. Gold is up $7.80, trading $12.57.20, as we once again make that treacherous trek north to $1,300. We're going to talk about the Ethereum miners later in the show. They're big in the news once again. European markets are a market of a different color. Everything's red. FTSE was down 9 points at the close. The DAX was down 93 points, which is 0.75%. And the CAC was down a little over 3 points. At the close, Asia was green wall to wall. The Nikkei up 29 points. Shanghai up 1.5 points. And the Hang Seng, there it comes, the big mover and shaker, up 190 points. 0.75%. True story. Asia green, Europe red, and here at home in the good old US of A, green, green, and even more green. We got a partners meeting tonight. For those of you that weren't aware, you should be aware. Partners, we expect to see you there tonight, 9 p.m. Eastern. You'll get your invitation and the link this afternoon. If you've been on the trial and you want to be in the partners meeting tonight, Michael has sent you an email over the course of the week. All you have to do is follow the instructions in that email, and you too can be behind the closed doors of the partners meeting tonight. All right. Now, there's widespread belief Donald Trump is lagging past presidents in submitting nominations for key posts in his administration. For the most part, that's true, except in one area that could help Trump leave behind his biggest legacy. When it comes to nominating judges to the federal bench, Trump is moving at a breakneck pace. And when you add in how quickly he's going about nominating for vacant U.S. attorney positions, the number of nominees in these crucial areas is dwarfing those of past administrations this early in a presidency. We're only 6 months in. On the federal bench, virtually all the vacancies Trump has been rushing to fill are, you ready? Lifetime appointments. Sounds like somebody's building a firm foundation. If you're a partner, you know what that means. This will be the single most important legacy of the Trump administration, according to Democratic Senator Chris Coons of Delaware, a member of the Senate Judiciary Committee. They will quickly be able to put judges on circuit courts all over the country, district courts all over the country. That will, given their youth and conservatism, it will have a significant impact on the shape and trajectory of American law for decades. 1, 2, 3. That deserved a bell. I do think this deserves more attention given the consequences, the significance of what will eventually be a wholesale change among the federal judiciary. See, he's a little bit concerned because he's Senator Chris Coons, a Democrat from Delaware. While only 3 of Trump's nominees for the federal bench, aside from Supreme Court Justice Neil Gorsuch, have been confirmed by the Judiciary Committee to date, the sheer number of nominees he has sent to the committee for both federal judgeships and U.S. attorney slots is staggering. Okay? So she hasn't sang yet. Through July 14th, roughly a week shy of Trump's 6-month anniversary in office, he had nominated 18 people for district judgeship vacancies, 14 for circuit courts and the Court of Federal Claims, and 23 for U.S. attorney slots. During that same time frame, in Obama's first term, Obama had nominated just 4 district judges, 5 appeals court judges, and 13 U.S. attorneys. In total, Trump nominated 55, Obama just 22. What strikes me about the Trump administration's judicial nomination process is how quickly they have moved, Coons said. But there is a catch. Of those 55 nominees, 45 are from or nominated for jobs in states that Trump won outright in last fall's election. If you remove the positions based in Washington, D.C., that number becomes 45 instead of 48. A remarkably high 94%. Just 64% of Obama's initial nominees hailed from states he carried in the 2008 presidential election, and there's a reason for that. It's known as the blue slip, and it's Senate's tradition to not advance any judicial or U.S. attorney nominee without having the blue slip or consent of both home state senators. Well, folks, while Trump is busy tweeting and keeping you distracted with his thumbs, he's laying some very important groundwork that has the potential to reshape the American judiciary system as we know it. You know, in the next 4, maybe 8 years, we could see one of the biggest cases in Supreme Court history overturned. And you know what I'm talking about. Roe v. Wade. Not placing any wagers, I'm just saying it could happen. Michael, if you're ready, we're ready for you.
I am ready, my friend.
All right, buddy.
And yeah, that would be something. Change the Roe v. Wade. But
It just could happen.
in my mind, I think he's got other things that he's thinking of.
Yeah. Yeah. If he defunds Planned Parenthood, that pretty much takes the bite out of Roe v. Wade. It's still on the books, but, you know, now we're back to, what do they call them, back alley abortions or something. I mean, that's a horrific thought in and of itself. I mean, if there's going to be one, I guess I would rather it be done in a clean and sterile setting and not in
Controlled environment.
some back room, yeah. For the sake of the mother, and, well, let's face it, we're not worried about the fate of the child, if you're leaning in that direction. And I don't want to make anyone feel bad, man or woman, who has been party to an abortion, because you know what? We've all done things in our life that maybe, you know, at some point later we realize, hey, you know, I wish I hadn't done that. I don't want anyone to live under guilt or condemnation. That's not the God that we serve. We serve a God of second chances. You might feel convicted, but do not feel condemned. There is a huge, huge difference. All right, buddy, I can see your screen, so I'm going to hit mute on my end, and the show is yours.
Okay. Thank you. Serve a God of second chances. I think that's the first time I've heard you say that. That is enlightening. And encouraging. In truth. Alright. Well, before I go off, let's just do this. Alright, good afternoon, everyone. Today is Thursday, the 27th day of July, 2017. Yeah, if you have not taken a free trial with us, go to the homepage here at cfrn.net, and you just watch right there. You see that? That little banner pops up right there. When that banner pops up, if you want to take a free trial with us, just click here, where it says click here. And that'll bring you here. All we need is your first name and your email address. Click on register now. You'll be sent a confirmation link. Click on that confirmation link. And click on that confirmation link. Once you do that, then we will know that you took a free trial. Okay, so do that and we'll know you took the free trial. And all will be good. We'll send you all the information you need to have 5 luxurious business days in our live training room. Hey, for all of you guys who might be considering Canon Capital, I put all our stuff on their version of DT Pro yesterday. Okay, so if any of you are using Canon Capital, then there you have it. There's another option. So we'll add that to the list of available brokers. All right, the spreadsheet. We had a red day today, guys. We only had 3 trades in the room this morning. That's crazy. And 2 of them are stop outs. One stopped us out to the tick on soybeans, -8 ticks. And the crude oil, we got -8 ticks there too. So we're -180. And we had 1 break even. We did not get the goal for the day. We missed like 3 trades probably this morning. And they were all winners, big winners, and we missed them all. During the break, I'll show you here on gold. We could have made it all up during the break here. Anybody that's an active partner should have made it all up during the break. But anyway, on the month now, we're at 24.17. That's over 17 days, averaging 142 a day. On the year, we're at 21.352. That's over 139 days, averaging 153 per day. Okay. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Now, here is the gold. All right. So we missed this first one right here on gold, where we could have gotten our gold for the day. All right. And then we stopped out right here. And we missed this follow-up where we could have made up for the stop out right there easily. And during the break, there was a short here and a short there, all of which could have gotten the gold for the day. Good afternoon, Pete. What's the weather like up there? I'm going to be going up there tomorrow. On the euro, we had nothing today. Okay, we missed this one short right here. It was followed up by a momentum short there, and then another one right there. We missed all that. It seemed like today, the markets weren't giving up much today, and when they were giving up something, I was answering a question or showing somebody something. But during the break, there was a shorting opportunity right there, another shorting opportunity right there, and there. Okay, so it seems like it all happened during the break today. On crude, we had just the one break even right here. And in the pre-market, there was some movement, but once markets opened up, we had one break even right here. We missed that one, and look at this one right here that we missed. Dang, that would have really given us. That would have given us everything we needed right there. During the break, there was a long trade right here, another long trade right there, and that was it. Okay, so all the money was during the break today, it seems like. Soybeans stopped us out exactly to the tick right here. That's minus $100 right there, exactly to the tick. And then they went and did what they should have done and put in a lower swing. Then they pulled all the way back and did not give another trade opportunity this morning. So I don't know what's up with the markets right now. We had FOMC yesterday, and I'll go back and look at that in just a minute here. But you see the ES is just, I'm speechless. I mean, it wasn't trending. If it were trending, there would have been a bounce off the BBC right here that would have been good for a break even. But they're not trending. Now, I said I was going to go back and look at the FOMC stuff with you. Yesterday afternoon, when it came out right here, the statement, gold made a big run up, and now it's pulling back down to where I would look for it to get all the way back down to here. That's what I would look for, where it was trading before the announcement. So I would look for gold to get all the way back down to here. Okay. But I suspect the flat market today was due to the FOMC yesterday. Because it seems like, when Obama was in, as much as they were just throwing money, our tax dollars, at the markets, behind the scenes, it created volatility. But now that Trump's in, and that doesn't seem to be happening anymore, markets have gotten a little bit quiet here. Still, it is what it is, but we're still positive every month, and we've been positive every month since we've kept track of this spreadsheet, which is 4.5 years now. But anyway, today we were down 8 ticks in soybeans and down 8 ticks in crude, and I just showed you how all that could easily have been made up in the break. Okay, but this time period is 2 hours per day. It does not include the break. So we took 3 trades today. 3. Okay, so our gross monthly profit now is $2,417. That is over 17 days, averaging 142 per day. That is gross. And down here at the bottom, you can see $21,352 over 139 days, averaging 153 per day. Now that is 2 hours with one contract. 2 hours with one contract. And Dell said, Yeah, Dell said he was in another room and they were trading ES all week and they got hit hard. And he said he likes what he sees with us, even with the red days. Well, we only have 4 colors here. We have green days. Green days means we got our goal and we stayed positive. Yellow days means we got positive, but we didn't get our goal. Blue days means we got our goal, but we gave it all back and ended negative. And red days means we didn't get our goal and we ended negative. Now, you can go back through all these years here, and see how it all turned out. But, there are times when the markets just don't give it up. And if they don't, we don't get trade setups. Today we ended negative, but we only had 3 trade setups. If we were trying to trade the ES on a really messy day like today, well, in here we would have had 1 trade setup right here, and it would have been break even right there. That's all we would have had. So with our system, Pete says, sign up, you won't regret it. With our system, you either get trade setups or you don't. And if you get them, then there's, I don't know what the percentage is, but there's a very high percentage of them are profitable. And the amount of profit depends on the volatility. Okay, because we don't put targets on our trades. We leave them wide open. So, like some of these things that happened in here today during the break, like this one right here. Well, I wouldn't have done that, but this one right here went for about 10 or 12 ticks, and you'd have been looking for most of that. That's what's different about us. Well, that's one of the many things that are different about us. And this one stopped us out to the tick. Darn it. I hate it when it does that, but soybeans have been pretty good to us over the last week, so I'm not going to complain about it. It's just one trade. All right, so I'm sorry, I got distracted talking about stuff. Okay, so today we're -8 there, -8 there, -180 total. That is our biggest down day since October, I think. That's a while. We only had 3 trade opportunities today, so we really didn't have any chance during the room to make it up. I did miss a few trades that would have made it up, but anyway. Here we go. If you have not taken a free trial with us, go to the homepage at cfrn.net, and this little banner is going to drop down right here at the top. I hope it does it on mobile phones and everything else. But anyway, where it says click here, just click there and fill out first name and email address. That's all we need. And click register now. Once you click register now, you'll be sent a confirmation link. You've got to click on that confirmation link. Okay? That's all you need to do. And then you'll be sent everything you need. Everything you need to get into the live training room. Again, one last reminder, there's a partners meeting tonight, 9 p.m. Eastern. Okay? And we will be there. And I was just told that what dinner is going to be tonight, so I'll probably be sleepy. So be there, and we'll try to get there on time. Okay? All right. With that, we can send it back out to Studio A, fabulous Phoenix, Arizona, overlooking the nation's largest city park.
Sounds like a deal.
There it goes.
All right, recap of the recap.
Today we didn't get the goal for the day. We only had 3 trades, and we were down on gold and down on beans.
Well, that's the life of a trader, folks.
It is.
We don't sugarcoat anything. It's the truth about trading. Very few places on the internet will you find the truth about trading, except after the fact. But we show it to you live in real time as it happens. Okay.
Yes.
So you can't paint the tape with a live chart. Historic videos can lie. Historic charts can be curve fitted to make any point you want to make. The one thing that you can't monkey with, that you can't fool with, that you can't change, that you can't pervert is a live chart. That's what you're looking at right now. It's a live chart. What I have on my chart is the same thing you have on your chart. Current price of the S&P 500 Emini Futures is 24.76 and a quarter, and 50 and a quarter.
And right in the zone.
Right inside the zone. How many times do you start a radio show right inside the zone? How does that happen? I don't know. I'm no physicist. But anyway, you've seen it happen year after year, day after day, month after month, year after year. All right. Well, thanks, Michael. We appreciate it. We'll see you tonight in the partners meeting. Guys, a reminder, Ed Corey is going to be joining us here in just a few minutes. And he will be with us for about 45 minutes. He is our resident Elliottician. So if you have any of those Elliott wave type questions, stay put, because he'll be here to answer them for you. And now we're going to go to John. Let me get his mic open. John, welcome to the show. Glad to have you with us.
Hi there. Glad to be here. We got a very dramatic day unfolding here. We just shorted the NASDAQ at about 59.92 actually, and again at 59.90, and it's currently just hit 59.55 a second ago. Initially we thought we might see an effort to get it up to 6,000, get through that resistance, but it just couldn't handle it, and now it's broken down. Probably take a shot at just covering here since we're short, and going back long right at the 59, 55, 57 area right now. So just for a bounce and see if that holds. This could be another scary kind of a shakeout that the market has a habit of doing periodically. And this is a little bit more risky right now because we also sold Amazon. You can ring the bell on this one. Sold it at 1082. How about that?
How about that? Good
sold
job.
it at 1082, and we are short, and it just hit 1062. So
excellent.
we also sold the Googles again off this interim high this morning. We're short all the FANGs right now, including, and we also sold Facebook above 175. So it's been an unbelievable day for us today. Actually, we had some really incredible. The overnight was basically a very, very amazing night for the NASDAQ. The way it pushed higher. Unfortunately, right around the close, I had a bit of an outage and I couldn't really see what was happening. So, but we managed to get long the NASDAQ in spite of it all. There's something else. Oh yeah, FNG. That's going down as well. We actually sold Tesla this morning, also near the highs. It was one of these days to be selling the highs of the day, really, today. That we said it was a day not to be overexposed in any way, shape, or form, and that certainly turned out to be the right thing right now. I would say that this looks a bit heavier than normal, and the fact that we're coming off here, starting to come off on the Dow and the S&P as well, although lethargically or sort of slowly. We also got a little bit of a bounce in the mid cap, but the mid cap is a big problem today, and so is the transports. Actually, what really gave us the clue this morning that we were in trouble, we might be having trouble, is that the transports crashed today, and actually they've been underperforming for several days, which is a definite problem. And we also, for the first time in a while, went long the VIXs here today, UVXY. I think we're in at around 28.5 on that, maybe 28 3/4 on that. It's about 29.3 right now. We also long the LABD, which is really hasn't got going yet, but we're short the LABU. from about 71.70. And we are long the TZA. We're short copper right now. We sold the copper near the highs. We sold the gold, all the gold stocks at the highs. Actually between yesterday and today, and we bought the dust and the J dust. And right now we just went back long. Literally 10 minutes ago, as the market was starting to sell off, we went back long the gold. But the metals, we caught the lows on the metals, not the exact lows. We caught it around about 1261 and a half, somewhere like that. It's really starting to move higher now. And we also caught the grains. Grains have been very tough, but we got that low yesterday around 985 or so, and the grains have gone back up quite remarkably well. I would buy the grains on any upside breakout here. I think there's a very, very big move still to come on the grains. Cocoa is another one we bought. We right on the show yesterday. I think we mentioned it around 1920. We are long from 1920. It just hit a 2005. Or the coffee, we also went back in around 129. We mentioned that was a hard trade to make yesterday or the day before, and it hit 136 this morning. We actually sold it at 136. It's off a little bit right now, but as I've been saying all along, I'd be inclined to want to take it home long, no matter what, as long as it closes, as long as it doesn't crash before the close. I would stick with it. The orange juice also gave us a rebuy at about 132 yesterday. We got it to about 133. It was a little bit slow off the mark on that one, but it's 137 right now. It's really looking great. Look at your screen. Look at this S&P, Jeepers. It's really.
The NQ. This is the NQ, and it's tanking.
Oh, that's the NQ, is it? Sorry.
Hard,
okay.
Yeah.
Sorry. Yeah. Yeah, no, we're back short here. This now it might bounce a bit here. This looks a little bit better than the last one.
Alert last night said to buy 59.73, so we had two nice run-ups there, and to short the 59.60. So we just had a 20-point drop in a matter of minutes.
Right, and the S&P's holding up real well. But this is what makes it so hard. When you get, the S&P and the Dow holding up reasonably well, and the Nasdaq crashing, it's kind of hard to reconcile the what's going on. 476.
Jeff Bezos just became the richest man in the world today.
Oh, he did. I didn't know. I didn't think of that when it went up there. So briefly, is he still there? It might have changed.
Yeah, it might have.
Yeah, because Microsoft's holding up. Nasdaq, the Amazon's taking a bit of a hit here. Kind of a sharp hit, and the Googles too. But look, it's going to be really interesting to see. Well, don't forget if I think is Amazon reporting today.
That I don't know.
It might be, and if it is, and then the news is good, this could just be a booster buy. This could turn out to be actually a pretty, look, it's the old story. When the market can't get through a big number, it has a habit of backing off, which it's doing right now, and get the energy to go back up through it. And obviously, if Amazon comes out strong today, I mean, the odds of it beating expectations are pretty high. It's almost like this news was leaked ahead of time, given how strongly it performed last night. I mean, it's kind of outpacing Facebook. and listen, the numbers on it. I mean, Facebook's really undervalued here, in spite of everything. It's obviously dollar-wise, it's expensive, but compared to a lot of stocks, it's incredibly undervalued given the incredible performance from Facebook that came out yesterday. When revenues are growing 50% per quarter, sort of thing. There should be a much higher premium on the stock, and it still could be. If this turns out to be just a bit of a pullback, and we start back up again, we could really get into a kind of a mania type of market here in the next few weeks. But keep in mind, look, it's amazing how the world changes so fast in just a few days. A few days ago, we were making all-time record highs, synchronized all-time record highs in probably 10 indices, and and then all of a sudden it starts fracturing, right? And you only have one or two indices going to new highs, like the Nasdaq, and the others can't cut it. And then all of a sudden the mid cap starts tanking, and then the transports really, this is a big deal on the transports. Transports have taken a pretty big hit here. So, for that to all come back together again, can we really see the next group, if we recover from here and start hitting new all-time highs, can we see that happen, with the same synchronization as before? I doubt it. I doubt it, unless we get something really extraordinary happen here going into the August 21 high. If we stretch it out that long. And right now, this kind of fracturing, even if we did hit a new high in the Nasdaq and maybe we get to 1100 on the Amazon. It was nice to get to 1082 today, which is just $20 shy of our target, and it actually happened kind of quicker, better in a way than we thought. And by the way, if this Nasdaq comes roaring back here, miraculously before the close gets back up towards 59.70, 59.80, or even 59.90, it could really explode in the next couple of days. So you could get that resurgence. And don't forget, look at they're working on this healthcare deal, and the healthcare deal is keeping stocks kind of the health stocks subdued in the last I wouldn't, they're not killing them. And by the way, remember our comments about Clovis?
Mm-hmm.
That's been one of our star performers. We covered the shorts on Clovis down around 84 and 85 and 87 yesterday, trading in and out. And we actually sold Clovis this morning at somewhere around 93 and a half, somewhere like that. It's just under 93 right now. But 90, but it, great. Look, this is a stock that can still go higher. So I would be looking to buy pullbacks in that. And Intercept, which as we've mentioned on this show a few times, got up to 132 this morning. We also sold that. And Agio and Blue and Puma PBYI, they both came up this morning. So they're not giving back much ground right now. And they, if we start to rebound, or I can guarantee you, if they come out with some kind of a bill on this healthcare, you'll see these drug stocks reverse very, very dramatically. So it'd be a good idea to be ready for that if you want to participate.
The Ethereum miners are rating Boeing 747s to ship graphic cards, and AMD shares are soaring as well. AMD share price jumped after it beat revenue estimates thanks to cryptocurrency miners snapping up the firm's graphic cards. Shares rose 11% after the chip company announced earnings on July 25th, but the firm's stock is up 152% over the last 12 months, making it the fourth best performer in the S&P 500. The need for graphic cards has helped AMD give a solid beat to the analyst estimates, while management wasn't specific on how much the graphics processor unit revenue upside was driven by cryptocurrency application. Crypto miners, and particularly those mining Ethereum, the second largest cryptocurrency by market valuation behind Bitcoin, has been in the crypto equivalent of a gold rush since early this year. They're racing to take advantage of Ethereum's exploding price by adding more processing power to their mines. Some of them are even resorting to leasing Boeing 747s to fly the increasingly scarce graphic processors from AMD and NVIDIA directly to their Ethereum mines so they can be plugged into the networks as quickly as possible. Time is critical, very critical. For example, we are renting entire airplanes, Boeing 747s, to ship on time. Anything else, like shipping by sea, loses so much opportunity. Up for grabs is a supply of roughly 36,000 units of new Ethereum digital token associated with Ethereum per day at current prices of around $200 per Ether. That translates to $7.2 million worth of Ether that miners compete for each and every day. So with Bitcoin, it reached a point where it was no longer economically feasible to mine it, but Ethereum is not there yet, and so there's still plenty to be made, 7.2 million to be exact, per day, if you have a rig set up, ready to go, and in production. So, pretty amazing story.
Yeah, it sure is. And the reason why those AMD chips and cards and things are being sought is because they're fastest chips in the world right now. That new chip from AMD, according to what I've been told.
Yeah, I'm assuming that's why they are seeking those out, because they are the fastest.
Yep. There's a bit of a spike top developing on the UVs. It doesn't mean to say that we won't trade higher against it if the market goes lower, but if this is just another shakeout and we start recovering, it actually could mean that we're going to go to new lows on these VIXs before too long. And you know, I mean, given the steadiness of the Dow here and the S&P in the face of this NASDAQ sell-off, you know, it's kind of amazing the way this NASDAQ has a way of clawing its way back from these skirmishes, the periodic skirmishes that they get. It's interesting. Netflix was the first to sell off today, and it's the one that's actually looking most steady right now. Actually, we actually had a buy-in on that at 183.5. And so I'm going to move that stop up right here to just below 185 on Netflix. And I would be ready to cover even the Googles and some of these other ones. This might be the bottom in the Googles here, actually. Not yet, but maybe above 939, say, possibly. We'll just see how it goes. I wouldn't just be stepping in and buying them here, but I might buy them on a if they rebound, you know.
Right.
So, and they could actually come back pretty fast from here, because I think this Google thing was a bit overdone, to be honest with you. And look, even Amazon's coming off the lows here. You know, reasonably impressively so far. I mean, you know, the market's got to have a bit of a pullback to sort of give it the energy to go to the next level. That's what's been going on since Ed's coming on in a minute. That's what's been going on with the energy sector since we were talking about it yesterday. It looks very good. Looks very good.
Yeah, I'm gonna look and see if he's out there yet. And if he is, I'll go ahead and get his mic open so he can weigh in on the conversation. Let's see if he's there, Ed. It is there, and so let me open up his mic. Good morning, Ed. Welcome to the show.
Good morning, Dwayne. Morning, John.
Hello there, Ed. How are you?
Can you hear me?
Yeah, I can. Yeah, great.
I'm good. I'm doing good. This is very interesting, huh? We've got some interesting times.
Yeah, for sure. I've been thinking of you the last few days, Ed, because you and I on this show, about 6 to 8 weeks ago, we kind of predicted what was going to happen with this oil, with the developing inventory drawdowns, which have been cumulatively pretty incredible, at least on the API.
They have.
And it kind of looks like it's here to stay, because it looks like the imports are being cut, which makes sense. And this Venezuela situation might also be crimping the imports. And
I think it is. The Venezuela is a bigger deal than most people think about, really.
Right.
It is a big deal. It could become very big. So we'll see. Yeah, I agree. The fundamentals is what we did talk about several weeks ago. Buying those spike downs into the mid 40s or lower has been paying off for a long time.
Right.
So in light of that, and the Saudis really want to get WTI up to $55 before they do their deal with the Aramco IPO. So, I don't know that they'll be able to get it there and hold it there, because there's a lot of guys, producers now, they're just waiting for $50 to start hedging again. So there's plenty of production to come back in and sell, but the rig counts, which have fallen a little bit, and so that the question is that going to be a trend or not? And I think when you go back and look at it, they haven't fallen enough to make me feel like that's going to continue to happen. In fact, there's some school of thought out there right now that if prices get above 50, the rig counts may well go up. And Canada came out and said they've changed their economics totally. And Canada is a big sands producer in Canada. They're the biggest gas company in Canada, and they have a lot of oil too. They came out and lowered their break-even price to $39 WTI. So that they have continually lowered that recently, which to me tells me they've got a lot of pin-up stuff ready to come to the market when they deem they're ready to do it. And they scared some people by saying that, because if the production costs come down to those levels, if they can make money all the way down to $39, they're going to max out production. But I don't think they're the norm. But $50, these guys, $50 to $55, I know that there's producers out there waiting for those levels. So it's pretty easy to say, that, the low 40s, mid 40s have been good buys, and I think that's going to probably continue to be that way. But then we have these hurdles to jump to get through those levels. We could get through those levels, particularly if there's a supply disruption that's significant. And Venezuela could make a difference. Certainly the Middle East and the war. I mean, I think we've got enough hairpin triggers over there right now that it could happen probably. I would say, I assessed the Middle East for many years, and I would say right now there's more things that could happen over there as far as a supply disruption than there have ever been since I've been watching the market. So I think it's potentially, worth thinking about, but not betting on. But that would back all these sellers off that are waiting to sell in the 50s. They would certainly stop. So, which means the price, and people are thinking that the fundamentals aren't quite there to do it. And we are in a strong part of the year for us. We're usually strong going into September. Mid-September to October, we start to see some fall off in demand, but demand has been very solid. And that's, the numbers have shown us that, John. That's why they keep going down. These are really big drawdowns. I mean, if we continue this out for another 8 weeks, we'll really have a big bite out of the surplus. And then if you don't have a surplus and you have a supply disruption, that's when the price can go much higher.
Yeah, there's every chance that could happen. It kind of like, there's enough things that could go wrong here. And if we get a cold winter as well, that could seal the deal.
That's right. Cold winter is going to become important, I think. when we get into that time frame, what the outlook is and the forecasts are will determine, how aggressive these guys are at selling this thing. But the products are, if we have good demand in our products, they're going to keep buying the crude even if it goes up. They don't care. If the margins are good for the refiners, they don't care what they pay for crude oil. If their product price differentials, make them money refining oil, they're going to refine oil if it costs $150 a barrel. We've seen them do that too.
Right. Look at the gasoline. The gasoline's really it's been interesting to watch this last few days. It's pretty rare. We haven't had a kind of a really powerful rally. The one where before the API, how the market went up as if somebody leaked the number ahead of time. That was really remarkable. And as I keep telling people, whenever a market moves like that, it usually means, there's good news ahead that, you can't see what it is, but you just have to sort of rely on it, that it's coming. But obviously now the market's hit a new level that it's not yielding much ground here at $49. And given we're going into the end of the week.
It's remarkably steady, isn't it? It is. I like the way it looks, and it's going to project higher into next week the way it's going for sure. So when we get to $50, let's see what happens. I mean, that's just a psychological point, but it's an important point too. And if it gets over $52, that's when we'll probably make new highs on the year, which is the high on the year is 55.24. So I'm looking at $52, and I know those guys are going to be scale-up sellers on their hedges. The question is, how aggressive are they going to be? Are they going to lay out, 10,000 contracts every 25 cents? And, that's a hill for the market to climb. The day traders will have trouble with that if they're long. So, they'll jump on their side, and what becomes, commercial selling becomes speculative selling on the spec side when they see the layered in amounts that are coming into the market to sell. So they're always looking to see if they can jump on the back of the producers, because if they know there's 10,000 or 100,000 lots just sitting there, or 250,000 lots out there to sell, and producers, won't really tell people that, but there's people that know that, and you don't, it all layers in, and they piggyback on big guys. So if they know the big guys are there, they'll start to get more aggressive with their shorting. But that hasn't shown up yet. Okay, that has not shown up, and that's what's impressive about it, that it could get this far, and we haven't really had it slapped down. So, you got to go with it. The market's not telling you anything's wrong with it yet. You can look at the fundamentals, but they're not all that bad. I mean, especially when you look at the days supply of inventory that we have, which is what counts, because that takes demand into account here, not just surplus inventories. Well, if our demand is really strong, like it has been consistently for the last several weeks in both distillate and gasoline, then that's telling us that there's an underpinning here that hasn't shown any signs of fizzling out yet from that end of the spectrum. And the Saudis certainly want it higher. We've talked about that too, right? I mean, they certainly want it higher. It's so much money at stake for them to get another $5 out of this thing. Makes all the difference in the world to them. And they need money.
Yeah,
the Saudis have always been the ones over there.
The situation is much worse than people think. There's so many of these borderline producers around the world, and Mexico is like in all kinds of dire straits with this.
You send 40 wives to Costco, that ain't cheap.
Yeah, and they get a lower.
The Mexicans sold into this thing.
Yeah, well, they get a lower price.
The Mexican hedges came in under $48, and they sold it all the way down to 44.
Well, they have
to. They put a lot of shorts on it.
They got such a low price. The Mezcla Mexicana, the crude that they get is about $3 or $4 below the price of West Texas.
Yeah, it's mine crude is one of the heaviest crudes in the world. So there's a ton of tar in it. The lower end of the barrel that you can't refine into like the better products that are really in demand. And if you got asphalt for roads and stuff, yeah, that's good for the Mexicans. But they're on a value of crude. You're right. It's a very heavy crude, which brings less money in when you refine it, and it's significant. You're right, John. Totally
Also,
right.
the other thing of interest is the increasing exports. So while the that could be actually in a way contributing to these drawdowns.
Right.
Think about it.
I think that's correct. And I think that the fact that the Saudis came out this week and said that they're willing to even cut more and certainly going to extend this thing beyond March of next year, that really put a floor under the market. It wanted to put a floor under it. I mean, that technically it looked to me like.
Yeah, exactly.
I just pushed you the charts, Ed.
Okay.
So you can grab them whenever
as it
you're
has
ready.
every time we've gone down there. Okay, let me just.
Before you're done today, Richard would like to hear your count on the S&P because he thinks we're close to an important top for at least a correction of possibly 100 to 200 S&P points, which is equivalent to 1,000 to 2,000 Dow points. That's no small number.
Well, I think we're due for a correction too, and I think pinpointing the time, we were in agreement this market was going higher. At the end of June, my S&P target for the third quarter was 2,500, and so we got and that was when the market was 24.17. We got to 24.80. I don't think the S&P's put the top in yet, but it's close. I mean, it's starting to look like the kind of things you see when you near a market top. I mean, one of the things is, the NASDAQ looked like it was ready to correct, and when it did, and it started leading us down instead of leading us up there for a while. It was the last one to come back and make new highs. The same thing, my quarterly predicted high on the NASDAQ was 65.09 when it was 61.40 at the end of June. And the Dow is 22,020 was 21,350. So we've come a long way. We're certainly within striking distance, easy striking distance with the S&P and the NASDAQ, but that doesn't need to be a firm top. But that was a pretty confident target, and that's for the third quarter. So we still got time left, right? We've got time. We can get all the way through the end of September. I believe that the sector rotation that goes on before you put in a major top, and I think that's what John was talking about when he was saying that, we start to see a shifting of the leadership. You'll see the brokerage firms start to recommend. They don't want the market to come off all at once too fast, so they do a thing like they'll put one sector in favor and one out of favor so that somebody's got to go with the money from one sector into another instead of pulling it into cash. That's what they don't want. The brokerage firms hate that, so they play the sector rotation game and markets tops, and it's called a distribution top, but it usually starts several months early. And I think we got the first part of that when we saw the NASDAQ dive there, but of course it came right back to new highs and performed like an uptrend would. I mean, it's impressive. We're seeing stuff from the NASDAQ. I think that, if you're not making money on the NASDAQ stocks, you need to start looking at it for your portfolio, because is this going to be the top? This is a third wave up on most of my counts on the NASDAQ. On the longer term counts, it's clearly in a third wave, which means if I'm going to try and pick the top of wave 3, I got to be very, very, very careful, because wave 3s keep extending. Even when they look like they're going into a wave 4, they don't pull off enough. They turn around and come back up to new highs, which is what the NASDAQ just did. You have to be really cautious trying to pick the top of wave 3. What I do know is this: the conditions are there, even if it would start now. Although my predictions aren't that. When I do my my stuff for the next month because we're almost near the end of the month. I'm quite sure I'm going to get higher numbers projected again on all these indices, but that doesn't mean it has to go there. I mean, a projection is just that. I have the odds on my projections. Okay, I just don't throw out numbers, and I know what they are. So of getting there. So when those odds start to slip, even though I'm projecting higher numbers, then I'm going to start to become really concerned. Or if I can kind of complete an Elliott wave up, and there's how many Elliott waves, John, on charts. You know, you pick the time frame, you can find a 5. Well, I'm talking about the more primary count on that, and the Nasdaq on the longer charts is in a wave 3 up on its monthly wave count, and so is the S&P. It's still showing us that it's in the 5th wave of the 3rd wave up. The Nasdaq could go back into the 3rd wave of the 3rd wave up. It still has that power because it hasn't come off enough. So we'll see. I'm going to get out of here, and let's see. I've got about 19 minutes going. So I think one of the things I wanted to talk about was the dollar. You can see it up on my screen. We've been talking about it. I got real interested in the dollar here when it broke.
I just wanted to say thanks for great to talk to you again, and look forward to the next time. And I'll bow out right now and leave you guys to it. But thanks a lot.
Thanks so much, John. Have a great day.
You.
Thanks. Bye.
So looking at the dollar here, and it's up on the chart, the monthly chart here. These are the key support levels. We had done the Fibonacci number from here back to the 4th wave. I always like to do that just to see, and then for the entire 3rd wave. Well, it already broke through even the 80% point. It broke through the 618 and the 80% point. We were looking at this 382 as being a critical support point to see if it would hold. I was thinking it would not hold based on the wave count, and it didn't. We got under it and closed under it. So we broke the 382. We have this fractal down here that some people that trade charts are going to be looking at, and a significant number. We're looking at that 91.88 level in the dollar index. And the 50% point is 91.37. So I think the dollar's very important to the stock market right now. The dollar is very important, and I believe the way these things usually go, if there's going to really be a currency change of trend, in this case from up to down, and we're not there yet. This is still a wave 4 pullback, and it still hasn't come off enough to really make you not expect it to go back and test this high. Then if it breaks the 50% point, and particularly if it breaks the 618 down here at 88.43, I would say the party's over for the dollar at that point, and you'll want to be selling rallies at that point. I'm not saying we won't get any rallies, and I'm not thinking they want any. I don't think it's in the best interest of anybody the dollar crashes, including the other foreign countries, because even though the big guys want to dislodge the dollar from the system, and I think they're working systematically to do that through the International Monetary Fund right now. And they're probably going to eventually get their way. I believe that this thing is not in their best interest to have a disorderly market that crashes, because it'll crash all the markets. But the currencies, if you look at what happened in the countries, Argentina, Iceland, I think it even happened in England, when their currencies crashed, their stock markets went up several thousand% because the stocks are valued in the country's currency. So our stock market may come off if there's an all-out panic in the dollar. There might be massive selling in the stock market, but the foreigners are going to come in and buy our companies. They're going to come in and buy it. So it ends up being bullish for the stock price, because if the company is an international company selling around the world, they still have the assets in place to manufacture the products that are in demand that they've been selling for 50 years, right? So people are going to buy those. That's value. That can be sold anywhere. And so they'll come in and buy the stocks, and it usually gets to the point, if it was really a big sell-off in the dollar, it'd be a big rally in the stock market ultimately. But the first part of that move down, when it becomes obvious, could take a cut out of our stock market. But I have no doubt it will come back, because it always has. I mean, it's hard to fight history on that. So the initial rush could hurt it, but it won't be bad after that. So having said all that, I still like to look at the charts here and say, well, the dollar hasn't thrown in the towel yet. There still could be something that happens overseas. And I remember when I was negotiating with some Middle Eastern folks on some oil deal back in the 80s, and the dollar was kind of bopping around, and everybody over here was thinking the dollar was crashing and everything, and the guy told me, I never thought about it this way. He said, look, here's what we think in the Middle East. America has the biggest gun in the world, and as long as it has the biggest gun, there's no way the dollar's going to collapse. He said, it's not. He said, that's the way we view it. And this guy was really smart. He was a really smart guy. We never did the deal together, but he taught me some stuff about values of currencies, because they value the currency on who's got the big gun.
Right.
So even if that's debatable now, we might not have the biggest, but it's certainly debatable. And so that's the other thing. We don't see that. We don't see that in the charts. We don't see that anywhere, but it's certainly reflected in there. So yeah, I don't think it's in the best interest of the world that the dollar collapse. So they'll do it in some orderly way if they dislodge it as the key currency in the world, which I think they'll ultimately get their way. Okay, so I'm telling you on this, I'm watching this level because the commodities are certainly affected by this. And the other thing on crude oil that we didn't mention here is that this would affect crude oil if this thing breaks a 618. I think you'll got a good chance of crude oil going over $60, which with the fundamentals right now isn't there. So this is a really big deal, this 618 retracement here at 88.43, and it's a big deal for all the commodities. Gold too. So I'll get back here. On the crude oil, we've talked about that buying spikes down into the mid-40s has paid off for many people because the recoveries have been quick. This one went all the way to 42.05. But the recovery was back in a week. It had it back up near 45. And it made a relentless rally there, from 42 up to 47, a $5 rally before it stopped. And then this one pulled back, held the low, didn't get close to it, 43.65. Now it's rocked to 49 bucks. So this one's going to end up being a $6 rally, maybe more. And so this is resiliency here. Can it all change? Yeah. But I'm reading what I see in the market. And one of the things about the fundamentals, you can almost know too much about the fundamentals sometimes. Okay. I came to the realization I need to use my charts more than anything. That's how I trade, even though I have a backdrop in that business. So when I look at crude oil here, it's in a third wave up, off this low of 43.65. If this is a C leg up, not a 5-wave move, even then, this should pull back. When it pulls back, it still should be bought. It should make new highs. So this move is not over in crude. And I'll be watching these fib numbers, of which I have to keep adjusting them throughout the day to get the accurate numbers. And this looks like they're going to test a $50 level. Psychologically, we might find a lot of sellers there. We might find producers selling there. I know some of them are waiting to do it. But they'll tuck their tail between their legs if it's going fast. They'll wait. So we'll see. This leg, that's a third wave up on this 170-minute chart. Dissecting that wave, we're in wave 5 up. So we could peak in here between 49 to 50 bucks. Yes. But I like the way it's acting. The drawdowns next week are should be very strong again on the report. Now the market's going to build that in because we've got a streak of big drops. Okay, let me jump to, how do I have the Dow in here? Let me jump to the S&P. And here's the S&P, and this is the daily. Let's just look at the monthly on the S&P. This is the third wave up from the 1068 low, and within that third wave, this is the fifth wave up of it. If this extends up to be more than this wave, this length here, then it'll go back into the third wave of wave 3 up. But right now, this is the fifth wave of wave 3 up. And when I look at the weekly chart, it looks pretty doggone strong. It certainly does. And I can make arguments for two different counts here, but I can't find any argument with that we're in the fifth wave up of the third wave on the monthly chart. Okay, that's the dominant count. That's the one that needs to be followed. As I look at the S&P here, it just keeps, these things look like fifth waves on the intraday charts, and it just keeps on rolling on up. So in the 240-minute chart, we're in the fifth wave of the fifth wave of the fifth wave, a lot of these charts. So we could certainly put in a temporary top in here, for sure. But before I'd be convinced that we were going to break apart, I need to see more downside performance, significantly more downside performance. And I'm sorry, if you want to try and pick the top in the market, it would have caused you to go broke, and you wouldn't even be trading right now if you've been trying to pick the top in the S&P, because it's blown everybody away every time it's done this. This looks like there's no tomorrow, right? This is a really nice impulse down. It's one of the bigger impulses we've had in quite a while. So yeah, this has encompassed the last 3 weeks. The people that got long here, and this is 3 weeks of trading, right? So there were 3 weeks here where people were getting long. They're buried right now, and they're worried about this fractal going at 62. That's going to bother some folks. So yes, we need to be concerned about it. But no, it hasn't broken enough. How much is enough? Well, let's just go back and do some simple math. I mean, first things first, we would want to bring it back to the 2402.25. Okay, and if I do that, let me get the numbers up here. See, this thing broke while I was on here. I haven't been... Oh, come on, please. Don't give me this hard time. I have to do this. Sorry, guys, because I got this on a different screen. All right. Now we'll come back here. All right. And today's high is 2480.5. Close enough. So here's our numbers coming back down that I'm going to watch right now. Get rid of this thing. I'm sorry. All right. So over here in the cursor box, we'll look at them. We have the 236 at 2462.20. The 382, more significant number, is 2450. So 2450, you can see it right here, is important to us. That 382 should find some support there. It should at least be a rest stop for a while, a place they'll try and launch another rally from. If that goes, then we're going to be looking at the 50% point, which is 2441, which normally in this kind of environment would go. If this is the key number to me, the 2450. Otherwise, this 618 is going to be in play and will probably be tested ultimately 2432. So far it hasn't done anything, right? It's gone to a 236 retracement. So what? Well, you can say, well, I counted 5 waves move, completed 5-wave move up in this thing, because we do. We have that, and saying, and that is what a 5th wave completion does normally look like. okay, they'll run out of buyers. That is what it looks like. But is it wise to measure your steps when it comes down to this stuff? Absolutely. Okay. So we know what the numbers are. We just need to keep our eye on the numbers. And right now, I'm not excited. You test 2450 and comes off of it, back up, fine. If it ignores it, then it's a problem. If it goes through it like butter, it's a problem. And a lot of times, if they're going to break our market, they'll do it in European trading hours. And because it'll be defended probably today, or at least attempted to be defended. And no one stepped in to defend it yet, but that 2450 level should be where they come in. We'll see. It's interesting. It's certainly interesting. I think it's a little premature, but you can say, well, that's a big 18-point reversal right now. And if you want to go short, go short. Okay. This is right at the 236 retracement here at 2462. Right here. So let's see. They might hold it there. I doubt it, though, because the impulse is strong. So even if they hold it there, they're going to bounce it, take it up tomorrow, or maybe later today. They come down and hit that 2450. That's probably going to get in play, even though this is kind of holding right now. Unless they hold it from here and get it up another 10 points, get it back over 2470, it'll relax everybody. So that's... I hope I'm not talking in circles for anybody. As far as Rich goes, yeah, this thing could top. This thing could put, because we go back, when we go back and look at that monthly count, we're in this fifth wave of the third wave up. And if that is it, then we're going to retrace a Fibonacci retracement back to here. So when Rich said, all those points that he was mentioning, that is not out of the question. Because just to get a 236 retracement on this thing would be significant. Because we're talking about 1068 to 2480. So just the quick numbers on it.
Right.
The 236 retracement is 2146. Would that bother you? That's the 236. Normally we'd get to the 382, the 50%. The 382 is 1940, and the 50% is 1774. I think that would bother a lot of people. So, yeah, we got to watch it. We'll see what happens. The leadership has been the NASDAQ. The NASDAQ looked like it was ready to break and lead to the downside, comes back, and it was the last one to make new highs. The Dow and the S&P made several record highs before it came back and made a new record high. Several of them. They did it way earlier than NASDAQ just recently did it. So if the NASDAQ loses its steam, that's going to be a problem for the market, because that was the leader. But then comes in that sector rotation that we were talking about. You'll see them start to recommend stocks in a certain sector and recommend selling stocks in a certain sector, but buying them over here so that the money stays in the stock market. That's the trick of these guys. That's how they do it. And it gives them time to dump all their corporate stock. The brokerage firms have money invested in the stock market, okay? They want time to get out because they got big positions they can't get out of when the market makes a really fast move like that. So let's just go over to gold. Wow, I got 1 minute, Dwayne. I want to show you one thing. I'm going to go quick. I was going to cover nat gas.
I've been trying to stay quiet so you could cover as much ground as you can.
I thought you were gone. So
no, I'm right here. I just wanted to give you as much opportunity as I could.
We're going up to my twin daughters have a birthday today, and we're going up to north of town to be with one of them, and we're all going to be together. The Commitment of Traders report, we talked about it before. I think it's only good at extremes, and I think you also have to take into account the value of the underlying commodity. It's not just how many contracts on. But I want you to look at this. This was a major low that we put in 2015. December of 2015, I believe, is when it happened. And if you look at the blue line is the large speculative length in the market. It was almost down to zero. Almost down to zero. And if you look at the commercial shorts, which is here, it comes almost up to zero, okay? Meaning they didn't want to be short. The gold producers covered their shorts here. They were hedged. They covered their shorts and got almost all the way out of the market. And while the speculators got blown away in this move here, they all dumped. So you can see this tightness here where they both came together, and that was the major low. We've seen a multi-year low, a very major low. It's the last time really we've gotten down this low is right now. We're almost near zero on the net speculative length, and the commercials have pretty much shelved all their hedges here, buying their hedges back in this down move. But the price is quite a bit higher than here. So I just want to point out that the market, from a commitment of traders standpoint on gold, looks really bullish to me. Okay? It's not like we're pulling something that hasn't occurred out before. This too was a low. This too was a low. These were decent rallies, right? But this is really an extreme. This is an extreme, and right now the blue line is down to the extreme. There's still some shorts that could cover in the producing side, and if they cover, they'll get us above this $1,300 level. And if we get above $1,300, I want to go now back to the charts and say this. Let me show you the monthly chart here on gold. This is the fourth wave down. This was a wave. This was the beginning, I believe, of wave 5 up, and that was a 5-wave move up to 1377. Okay, it was a 5-wave move up to there, and we pulled back to 1123, and this is more than likely going to be a third wave up of wave 5 up once it goes through this level. Okay, 1377, and it's going to become real bullish at that point. And the closest 5th wave projection on gold is 2097, and then we got 2700. So we're looking at a market here that could really fly. And if the dollar continues to come off, it could be really problematic for a lot of reasons. So keep that in mind, that I'm not telling you to buy gold, but I'm holding gold call options right now. And I have been able to multiply what I put into them in the last couple of weeks by several times. So somebody's buying the gold options, not just me. I'm not big enough to push the market, but there's been a lot. They've really bid them up on this move. So when you look at that and you look at the cryptocurrencies, of which I claim to know not much about, but I've looked at what's been going on there, and I've decided that I'm going to learn those markets. I'm going to commit myself. There's too much happening there for me not to at least know about it. I've shunned it and stayed away from it, and I don't want to anymore because there's a lot of big money going into those markets, right. And that may be where it all goes into panic. So I have to know that. I mean, if I'm an investor, I have to know that space. I'm going to learn it. I'm not sure from who or where, but I'm going to start that endeavor pretty soon. So that's all I wanted to say, Dwayne. I think the dollar is really integral to everything we're trading. And It's really important to watch those points on the dollar that we talked about. And I don't think I can need to say anymore. We're
See if
heading
there's
out,
any other
and I appreciate it.
questions. Let's see. Richard says, I think the top was just put in, was looking for one more rally to 24.62.75, needs to hold hourly.
You know, what I would ask Rich is what would he want to see break? I mean, and those levels start to break under there. See, I'm going to end up giving them, 40 to 50 points on this thing before I start to get serious about what am I going to do, because there's been so many false starts in it. This is significant because of what the NASDAQ's doing.
Randy had a question for you, too. What does Ed think of Andarko and Whitting cutting their CapEx?
Yeah, I'm not. I wish I could answer that specifically, but I don't think I followed them close enough to do that. I know I've been disappointed in the performance of the energy stocks versus the crude oil market. Mm-hmm. They have not been willing to come up with crude oil like they normally would. They have not. They've had a hard time holding on to gains even when crude oil is positive on the day. So I'm a little concerned about it. I am a little concerned about why they're disconnected right now. Because, see, they don't believe they're going to get the boost in earnings until this thing, stabilizes really over the mid-50s. And they don't believe that's going to happen. So they're not really buying those stocks. I mean, they are not, even the good ones. And Exxon was down on the day. Let me see where it's at now. Exxon and Chevron, that they have not participated in this rally much at all. Not at all. From when it was like $43 up to here 49. I mean, they're not. So obviously, I think, they're being concerned. They're concerned about the market holding, but they also haven't really started hedging really big yet either. So, but people haven't bought those stocks. So, and I talked to a friend who's really in the business, and he turned some of his money over to his son, who's always been a good stock trader in the energies. And he said they got slaughtered in this last move because it hasn't followed up crude. He just held on because he knew it would turn around. Well, crude turned around, but those stocks didn't. So I think you got to be a little cautious with them, definitely. And I have had Exxon for a long, long time. And I've got it. I've been looking at it because I've got it in some of my kids' accounts too. I'm more concerned about them than me.
You're a good dad.
Anyway, Dwayne, it was good to talk to you, brother.
Good to talk to you, man.
I
guess 2 weeks we'll talk to you again.
Sounds good.
We'll good?
We'll have a whole new market.
All right, brother.
Take care.
God bless you, man.
Okay.
Take care.
You too.
All right.
Bye.
Okay. Drag the charts back, and we'll do a quick run through. And let me hit mute on Ed's mic so he doesn't have to worry about it. There we go. Okay, your mic is muted, Ed. All right, real quick. Let's take a run through the trade alerts from last night. Okay. Now we're looking at gold, which is actually starting to rally up off of this 1258. When we broke through 1258, the initial drop was $190 per contract, and then we got back above the trigger. Important prices, important areas are almost always tested. We dropped $410 per contract. On the buy side, which was 1264, the first pop was good for all of $70 per contract available, and then the second pop ran up 100. So the biggest move was this drop here, which began at 11 a.m. and 11:30. This candle closed here, opened here. This took us above, and then this brought us back below. Okay, that was good for 410. All right. So on bonds, 30-year bonds, the email said to consider selling 1252 1/4. This first drop here was good for 16 ticks at 31.25 per tick. Now, did we move lower? We did. Put a little bit of a double bottom here. However, notice the pullback here. It didn't go back quite far enough to put together a new trade to trigger us short. However, if you were trailing your stop, then on this pullback, you would have most likely been stopped out along the way. So that's why, rather than using this area, I used this area here. That's what the market made available. But if you're trailing your stop, as price pulls back, that's where you're going to get taken out. Okay. Now, on the S&P, we've already dropped down to 2461.62. Below that for this week, now these are this week's zones, we've got 2452/53. Now, there's quite a bit of time left in this candle, so it may be that the 61.62 area holds. We've got this nice wick sticking out below, but it's where the candle closes that will be important. If we close back above 61.62, that could be the beginning of a rally, at least back to the zone overhead. So we'll give this some time and see where it actually closes. Now, last night on the S&P, the email said to consider selling 24.74, and that would be right here. $24.74. Sell 24.74. Okay. And the swing low so far has been 24.57. So, give me 1 second, I'll be right back. All right, we're back. Now, Richard says that breaking 24.62.75 hourly close means top is in for the correction. Yeah. Okay, well, we'll see how that turns out for you. Okay, because it looks like we're about to put a rally in here. So, anyway, 24.74 down to the swing low at 57. It's 18 points at $50 per point, or $900 per contract available. That's on the S&P. You see, we got this tail, and we've still got 14 minutes left in this candle. Could it rally all the way up to the zone? Absolutely. It is a possibility. Always embrace the possibilities. Okay, on the Dow, we had said to consider buying 21,680. We triggered. We had a pullback, which amounted to about $100. As you know, we never risk more than $300 on a Concierge Trade Alert. And then we had a rally up of 54 points. The sell side on the Dow was 21,620. That swing low was 21,632. So there was no trigger on the short side. Okay. Soybeans, consider buying 1010. Ran up 2.5 points at $50 per point. The sell side on soybeans was 989, which obviously was not triggered. On bonds, we said to consider selling 152.25, and this first drop 16 points, 31.25 per tick, 32 ticks to a point. 16 and 16 is 32, so that tells us this is $500 per contract available. Okay, did it drop farther? Yes, but on this pullback you would have been stopped out. Okay, next we go to, what haven't we covered? Crude oil. Let's take a look at crude. Okay, now the alerts went out last night at 7:30, so that's 19:30. Which is right there. 19:30. Okay. All right. And we were looking to be buyers at 48.90 based on the email. Which is going to be right there. Keeping in mind that where you enter the trade is only part of the equation. If you enter there, where do you have to put your stop? Does it exceed the $300 per contract? Bart asks, on bonds was the first trade to stop out. I don't know, was it, Bart? Just the bonds? Are you talking about here? The long side was 153.17, which did not trigger, and the sell side was 152.25, which was here. 152 and a quarter. So tell me we're at 9 o'clock. 9 o'clock. 152.09. 152. Okay. I'm not sure what prices you're looking at. Okay, these are the prices from last night. Bonds. Consider buying 153.17 or sell 152.25. So tell me what I'm missing in your question so that I can answer it for you. 152.09. That's right here. Okay. So the 152.09, that was yesterday. That was yesterday's. And we talked about that yesterday. Based on a 30-minute chart, you would not have taken that trade because you would have had to put your stop right here, and that would have exceeded the $300 that we're willing to risk per trade on a Concierge Trade Alert. Is that what you're referring to, yesterday's trade? Yeah. Yeah, see, that's a trade you would not have taken based on the 30-minute chart. Because you would have had to put your stop up here about 152.20. And so that's 11 ticks at 31.25 per tick. So that would have put you over the $300 per contract that we are willing to accept as a stop on a Concierge Trade Alert. But thanks for bringing that up. Yeah. So I'm glad you understand now. Okay? You're welcome. My pleasure. Okay. So we took care of crude. Yes. Okay, that was the buy side. On the sell side for crude, we were looking at 48.30, which again, on a 30-minute chart, there was no opportunity to get into that trade. Okay. Now, at the buy 48.90, again, you're only going to risk the most recent swing low on this chart is going to be right here or right here, and that's not going to work. Okay. Most recent swing low here, that's not going to work. The most recent swing low here, even that's not going to work. Okay. So again, it's not only important where you enter, but where you have to put your stop. We don't want to risk more than $300 per contract on any one trade. Okay. All right, moving on from the crude. What do we have left? The NQ. All right, the NQ. Man, that thing went. Look at that. Wow. Talk about some volatility. If we could see that in the rest of the markets. We'd said to consider buying 59.73, so it ran at 14.5 points at $20 per point. Came back down to the trigger. Now, here's the deal. It got down to a low of 59.73, right on the nose. It actually needs to go one tick below to reset the trade. So, really, although it ran up 22 points here, it did not meet the criteria by going one tick below the trigger. All right. The swing low on this thing. Let's just go with this one, because maybe on this pullback here you got taken out. Maybe even on this pullback you got taken out. All right, so from 59.60 down to 76.25. Yeah, even rounded up to 77. 59.60. The low. I'm sorry, it was 59.09. So that's going to be 51 times 20. So basically right there, that's $1,000 per contract available. From 59.60 down to 59.09. It's 51 points at $20 per point. It's $1,000 per contract. And so then that takes us down here to 58.60. That's 100 points at $20. So right there, that's $2,000 per contract. And we saw all that happen in the midst of today's show. And it dropped even further. Okay, but look at the pullback. If you're trailing your stop, especially after you have $1,000 on the table, remember the rule of thumb. Anytime you make $1,000 per contract on any one trade, what do? Take the money and put the mouse away. I think Russell might be the only thing we didn't cover. On the Russell, we said to consider selling 1435. So 1435. To take a free trial on the Concierge Trade Alerts, all you have to do is just go to emini.cfrn.net. It will cost you $1. Okay. And then send an email to support@cfrn.net and say, I took the trial. That way we make sure and add you to the list so that when the numbers go out tonight, you will receive yours. Okay. All right, so from 1435 to 1424.70, let's round that up to 1425. So we've got 10 points at $50 per point. So what the market made available was $500 per contract available. Okay. Right. And I think that covers everything. We did gold, right? Yes, we did gold. Did the Russell, we did the NQ, we did the crude. Did the bonds. Did the soybeans. We did the Dow, and we did the S&P 500. Biggest move we've seen in the S&P in quite some time, and it all happened in an hour and a half. A reminder, tonight is the Partners Workshop. If you're ready to learn how to trade for a living. Now remember, our belief is that the way to solve the equation, the trading equation, is not more points. I'm going to make 10 points in the S&P today. I'm going to make 20 points in the S&P today. No, as of late, you've seen the S&P some days doesn't move 10 or 20 points. But to say I'm going to make 2 points in the S&P today, that is a realistic expectation. And the way we teach you, you have 10 trading opportunities to make those 2 points. Now 2 points in the S&P is only 8 ticks. So you're looking to gross 8 ticks out of 10 trades. You see how we take something that seems hard, difficult, and we don't make it easy, because there is no easy in trading, but we show you how to make it simple. if you've been on the trial and you got the email from Michael with the instructions on how to become a partner, there's still plenty of time this afternoon to get your paperwork filled out, get your user ID, your password, and to get you into the partners meeting. Okay? If you did not receive the email and you are ready to become a partner, email us support@cfrn.net or call 949-42-EMINI. 949-42-EMINI. All right? That's going to do it for today. I hope to see you tonight in the Partners Workshop. If you have any questions, if there's anything I can help you with, by all means, do get a hold of us. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.